Welcome back to the channel, guys. Today I will be going over two trades that I took last week. One was an EU buy, two was an EU sell. If you want to follow the trades that I take, follow my Instagram page, Yarimi University, YARIMI I don't have any other pages apart from my personal, which is NASSERALYARIMI. If you get a message from any other pages pretending to be me, that is not me. Please do not get scammed. I'll never DM you first. I'll never ask you for money. Let's get straight into the analysis. So as we can see on the 1 minute time frame, EU was printing higher highs and higher lows. Once we got to this level where we understood, okay, what makes a low is that the low must lead to a high that causes a break of structure. What makes a high is that the high must lead to a low that causes a break of structure. So in this scenario here, we understood that, okay, in order for bears to be in control of the market, what must take place is that this low here must be taken out, because this was the last structural low from when price pushed up and retraced. Okay, so this structural low was taken out, so we marked out this POI right here. And the correct way to mark out a POI is from the top of a zone to the bottom of a zone, or from the bottom of a zone to the top of the zone, depending on whether you are looking for buys and sells, whether you are in a premium or a discount. Okay, we got that. Lovely. So now what took place here is we understood in accordance to our understanding of market structure. We can clearly see that this level here was breached, hence why we marked out this level of this POI. So now we didn't take the sells first, actually we took the buys first. So this was a marking that I actually marked out in my Sunday market breakdown Zoom call that I do for my students every single Sunday without fail. Okay, so keep in mind, guys, that level is still up there. We haven't approach that level just yet. So what's taking place now? We have another build up of Asia. Asia was forming those lower highs and lower lows, and this is great because for me this is only just an extra confluence as to why price wants to push up to the original zone I had marked out earlier, where I was waiting for those sells. So in this scenario now, I understood, okay, Asia gave us the information. And Frankfurt only went and confirmed it. Why? Because it built up liquidity here. There was an unintentional movement inviting those early buyers to buy the market from here, followed by a liquidity sweep. This is where we got our expansion, and price breached right here. Price changed. It breached this structural point. And what happened after that is price pulled back in, and it pulled back in within my London trading window within the correct timings. Okay, it pulled in and tapped into my POI within the timings that I trade. So it's an extra confluence. So number one, what do we have? So what we had was Asia giving us those lower highs and lower lows, making people think this is a bearish market. Overall it is, but temporarily internally we were bullish. So these are nothing but liquidity points for buyers to attack later on. So this was one confluence for us. The second confluence was Frankfurt session printing those early buyer invitations to invite buyers to buy the market prematurely. And then what happened here is we had a inducement of that low where buyers were getting in, where their stops were lying below. We then got a shift. We got a change of character right here. And then we also got the pullback into our zone. Beautiful. Within our time window. You can see this is 9 a.m. London session. So price tapped in, price pushed up, and over here, this would have been my 1 to 3. For those of you who don't know, I close my trades. I close 50% of my trades at a 1 to 3, and I let the rest run until full volume. Let me just extend this right and show you guys. So if I go ahead and take my long position tool, bring it lower, you can see this is our 1 to 3 RR. So I banked 50% there, and I let the rest run until full volume at the Asian high. Why did I not let the trade run until that supply zone that I had marked out that I initially wanted to sell from? Simply because I understand, okay, whenever there's an Asian high or an Asian low that I swept, price is most likely going to do some nonsense in the opposite direction, or price might use that as an inducement and then come back all the way and hit your stop loss. So I said to myself, the most probable scenario right now is to take full volume at the Asian high, because I'm waiting for sales anyway. So I'm not going to get greedy over extra few pips. Instead, what I'm going to do is I'm going to take my full profit at the Asia high, and then once price taps into that POI that I had marked out initially, remember from the Sunday market breakdown Zoom call, this level of supply that I marked out here. Why? Because this was the change of character. It breached the structural point, and now we are getting that pullback. And along the way, what I did was I highlighted levels. I highlighted this structural point over here that induced this structural point. I highlighted a level of trendline liquidity that had not been taken out just yet. Okay, so these are all confluences for me to take buys up until these levels of liquidity are breached, to give me more confluence and confidence in holding my sells now. Okay, so as soon as price tapped in here, what did I do? I took the sell. Why? Because if I get my price range tool and I draw it from the open to the high right here, it's only a 3.4 pip stop loss range, which allows me to confidently take this trade and I already got my early confirmations anyway. So I've entered the sell from here. Again, at a 1 to 3, what I did was I closed 50% right here. Okay, it's 1.329, but on my broker, because of the spreads, 1 to 3 was around this level here. And I let the rest run until the London low. This was our London low right here. I let the rest run until there. Okay, beautiful. And price went ahead and hit my TP. It went for further levels, but I mean, to make an 8.6R and then to make a 5R in a single day, obviously before factoring in partials, it's amazing. I'm happy for the day. I'm absolutely, I'm grateful. The most important thing here is risk management, guys. The most important thing here is your partial profit taking systems, because having a good partial profit taking system can keep you profitable even when you don't really necessarily have the best trades. If you have a losing trade, just by having a partial profit taking system, it can allow you to become profitable over time. A very, very, very good friend of mine, Wakar, he's someone who also incorporates partial profit taking systems. And he said to me, we was having a conversation the other day, I'm in Dubai currently, and he said to me, bro, like I did 60% in front of everybody, and 30% of that came from a 1 to 3 where price eventually retraced and hit my stop loss at a break even. So that's just the power of taking partial profits. He made 30% simply by taking profit, closing 50% at 1 to 3. And this is what people don't understand. A lot of the great traders take partial profits. If they don't, it's because they probably trade 1 to 2 or 1 to 3 in general. So that's very likely. If they have a good win rate, they don't need to take partial profits with that system. But if you have high RR trades, you don't want to be that hopeful trader, that delusional hopeful trader. You want to be a trader who has good high RR trades, realistic ones, but he also understands the nature of the market and he wants to close out partial profits along the way. So in this scenario now, guys, look, say for example, you was on a funded account. Let's say, for example, you was with Ascend X Capital. So if you want to buy a 100K account with Ascend X Capital or any prop firm account with Ascend X Capital, use my code Yarimi. The link will be in the description. So whenever you're trading on a prop firm account, you want to incorporate partial profit taking systems, because you know the best way to pass a prop firm is by simply doing what? By simply building a buffer. You're not going to pass a prop firm simply by just trying to go to the moon on every single trade. You have to understand there must be pit stops, and those pit stops of taking partial profits is what's going to allow you to pass that account over time. And it might not necessarily take long, because seeing a 1 to 10, a 1 to 15 RR, or seeing even a 1 to 8 is less probable than seeing a 1 to 3. Do you see? So I'm someone who preaches high RR trades, but I'm not delusional. I will take profit at a 1 to 3 and let the rest run. So if you're trying to pass your prop firm account by hitting a home run, it's going to be very long for you to pass that prop firm, and it's going to be a lot of external emotions, unnecessary emotions involved, as opposed to if you were to bank 50% at a 1 to 3, take a breather, move your stop loss to break even, and now your trade is risk free. And now you can genuinely trade from a trader's point of view and not from a madman's point of view. So that's something I would definitely recommend you guys to do, especially if you're trading on funded accounts. Make sure you take partials, guys. Take partials, because those partials, they do build up. And the statement I want to leave you with for you to incorporate into your trading is, mountains were made from pebbles. So never ever disregard what the accumulation of small profits could make your account equity curve look like over time. It will keep you profitable if you know how to trade. So that's been it from me, guys. Take care. Peace.